So anyway, that's kind of where this comes into play. Now, the new big scare in finance, and we're going to join the Ramsey crew to wrap up here, and we're going to watch them try really hard. So I'm going to give you kind of a breakdown of what's going on. So, those of you who don't know, Russia invaded Ukraine over a year ago, and they've been in pretty bad war. They've been in a shooting war with Ukraine for a while, but they got escalated when Russia tried to invade. Has not gone super well for Russia. It hasn't gone great for Ukraine either, but it's back and forth. And we've been funding a lot of the Ukraine and the weapons, and so is the European Union. Um, anyway, so they're in this middle of this war. Well, when the war started, Biden was president. Biden instantly sanctioned, right, Russia and said, okay, we're going to sanction Russia from the markets, we're going to sanction the banks, and we're going to sanction from SWIFT, which was probably the biggest one. For those of you who don't know, SWIFT is the international trading platform for banks. Okay, so if you're a bank, you can't trade daily without SWIFT, right? This would literally be like somebody comes into an office building and cuts off your phones and emails, and you've got to do everything by fax now, if you can still get fax, right? So it shut them down. The ruble collapsed. The Russian economy collapsed instantly, like overnight. People were fighting over flour within a week and sugar, just basic stuff. So it got bad. And what happened was a lot of these other countries they're not directly aligned with us, so they're kind of have sketchy alliances with us. They started freaking out because they realized, I mean, not that we haven't done this before, but to this extent, we haven't done it. And basically, it's because everything's pinned to the U.S. dollar, and it has been since after World War II. And I'm not going to give you a big history lesson on the Brentwood and all that stuff, but that's just been the way it's been. So the reason is we also have the most stable economy and the largest economy in the world. So the U.S. dollar is very secure. The U.S. government always pays its bills on time, for the most part. We know that they're pretty reliable, right? So the major countries aren't really. They don't care. Most of Europe doesn't care. Japan doesn't care. Canada doesn't care. South Korea doesn't care, etc. It's countries like Brazil and Argentina that this is, a little bit of a danger to. Countries like Saudi Arabia, countries like Russia and China. So what happened is Brazil and Argentina and some of these other countries started saying, well, hey, the problem is especially countries like that where we're so heavily dependent on oil. These countries are called the BRICS. It's Brazil, Russia, India, China, and Saudi Arabia are the big five. And they're all kind of in this, and they realize we're so dependent on oil for our economy, and oil is completely tacked to the U.S. dollar. I mean, inescapably tacked. So what happens if we cross the U.S. and they sanction us? It'll be impossible for us to trade. Our economies will collapse. So what they're trying to do is let's broker deals where we can trade in our own currencies, or we can trade in some alternate currency. And so Russia and China have been talking about doing that, where Russia's talking about, well, we'll trade in the renminbi, the yuan. I'll just call it the yuan. It's the same thing. We'll just trade in that. That way, if the U.S. sanctions us again, right, or whatnot, we have at least some security with the Chinese, with the yuan. Not a great solution because the yuan is not a stable currency. It yo-yos up and down quite a bit. On top of that fact, the yuan is very limited in where you can trade it. You can't really trade it in a lot of places outside of China. I mean, it's difficult to trade. And it's not like a currency that sits on any global market. So it's not like it's a great solution, but I guess it's one thing more than nothing, right? But people on the right have been freaking out about, well, the Chinese are trying to undermine the U.S. dollar by doing this deal with Russia. And it's like, no, they're doing it because, frankly, the Chinese are trying to be more dependent on their own money. They're trying to get away from U.S. debt, right? Because China wants to be a global financial power. And the other thing about it is it's just a good deal for them because Russia is now beholden to them. But the Dave Ramsey Show, George Skippy Camel, and Ken Fruity Doop Coleman are going to try and break this down and explain it to you. And guess what? They're not going to get it right.
So what you just explained to us, this is going to be their attempt.
Yeah. Basically, it's the same thing as always. They half read an article and barely understood it. So we're going to watch them real quick and then...
Everybody's freaking out about the latest round of negative news.
I'm not freaked out, just for the record.
I know you aren't, but we'll tell people why.
Okay.
So the source here, we want to just give a brief amount of perspective because the news exists to freak us out, scare us. They want pearl clutching, hand wringing. It makes for good ratings, George, and then they can sell those ads for a little bit more money. So the latest is freaking people out about our financial future, specifically the dollar. All right, so you've got, Putin, Vladimir Putin, Mr. Russia over there, and you got Xi Jinping, who is the Chinese premier, and now they're hanging out.
A 3-day summit.
They're in cahoots, George.
I don't like it.
I don't like it either. And so you got Putin and Xi Jinping.
So already some sound analysis. The
I feel like they're acting as though these two countries having leaders hanging out is new.
Yeah, they're both dictatorships.
I mean, this is just not new.
Yeah, they haven't been ultra close, but they've been fairly close for, since the 40s.
Right.
So.
All right. I guess let's go on.
Yeah.
This is already stupid,
But they're talking like they're talking like a 5-year-old. So Mr. Russia.
I think I'd look cute in his shirt.
Yeah. Mr. Russia and Mr. China are hanging out, and they're bad guys. And it's not good. It's like the Joker hanging out with the Penguin.
Hanging out. And they're talking about an alliance to threaten the U.S. dollar.
And you want the direct quote from Putin on this?
Anytime we can hear.
So here's the deal. It doesn't. They're not. Putin would like to threaten the U.S. dollar. China would be okay with this undermining it, but they realize we're not threatening the U.S. dollar.
Neither one of them have strong enough currencies. I mean, I think they could say that. They could say those words or something like, I threaten your dollar, right? But they don't have strong enough currencies for that to actually be a thing.
Well, I could imagine Putin, his regime right now is so out there. They might be crazy enough to think they could do it, but I think the Chinese government is smart enough to go, no, but if it undercuts the Americans a little bit, doesn't hurt us. But I think that's all China thinks about it. Plus, China's thinking we'll make some extra money off of it, so because Russia will have to go through our currency, so we'll get to set interest.
Hear from Putin. I like to hear from him.
I'm tempted to try my Russian accent, but I think I will offend all people groups in doing so.
Well, if you die mysteriously this evening, we will know why.
Okay, I so badly want to do it. I'm so nervous.
Just do it. It's an entertainment show.
We are in favor of using the Chinese yuan for settlements between Russia and the countries of Asia, Africa, and Latin America.
What are you? He's watched too many James Bond movies, but I will applaud for that. That's pretty good.
So there's the quote. He's saying, basically...
These two are like the worst substitute teachers in the world. Am I alone on that one?
No. My kid would hang them out to dry.
Oh, yeah. Oof.
I'm literally imagining them in my class.
From the
what was that? Hang on. Go ahead.
No, that's it. I was just imagining them in my classroom in the train wreck I would come back to.
Yeah.
Group destroyed. They might be tied up in it, man. I don't know.
These are the two guys that would walk into the high school as the substitute teachers, and all the kids would be sitting there going, how long do you think it'll take us to make them cry?
Think we can duct tape them to a desk? We'll come back for them later. It'd just be funny for now, right?
Yep. Oh, man.
Oh, sure.
And move to the Chinese yuan.
Yeah. So,
which could hurt America, obviously.
So you've got two schools of thought when you see news like this, right? You can go out on the internet and you can see a whole line of articles and opinions saying this is really scary. They're going to collude.
Now, first off, all these articles that are saying it's really scary are right-wing sites for the most part. You see it on the financial news is talking about it, but really matter-of-factly, and it's not a big story. And you don't hardly see this at all on any sort of left-wing kind of news. And you're not going to see this on the mainstream news because it's a boring story with a boring end, which is nothing's really going to happen.
Right.
So yeah. So this whole you're going to go on and see all these scary stories. Yeah, but it's coming from your guys' side of the pond, dude. It's not coming from over here.
They're going to knock the dollar out, and they're going to take all of our savings. It's just going to be an absolute disaster. Then on the other side, you got just as many experts and economists and people going, you know what? If that were to happen, it would take a very, very long time. China can't do it. They won't do it because they own most of our debt, which that part is true.
That is not true. So I want to get back to this because they're going to go into a little bit of the China fear-mongering again. This is a fucking lie. China does not own a lot of our debt. China owns a very small portion of our debt. So right now, China holds about $870 billion in U.S. debt. Okay? And they're offloading a lot of it right now because they don't want to hold as much anymore. Now, we have 31 trillion in debt. So China owns 2.8% of the total of U.S. debt. 3/4 of all U.S. debt is held domestically in the United States. It's owned by Americans or it's owned within the government, right? So China doesn't own that much U.S. debt. We're not in any horrible beholdens to China. We could pay it off pretty easily if we needed to, right? Do you know who the largest foreign holder of U.S. debt is? Japan.
No.
They own over 1.08 trillion. And believe it or not, Japan is a super, super close ally. Japan doesn't even really have their own military. They use ours. That's how close of an ally.
Strategy. Let's not bother with all this. We can just let's let them do it.
Yeah. So I don't know what they're worried about. So this whole China owns a ton of our debt, that's bullshit. It's just bullshit. It's not true. But it is part of the fear-mongering. China owns all this debt. China has all these people. China's taking our jobs, right? China's releasing pandemics. Right? It's all this conspiracy fear-mongering to try and gin up some sort of political movement against China, when in the end, nobody's going to do anything anyway. Because we buy all their goods. But that's the problem is they're still stuck in that realm of Chinese fear-mongering.
So the point we're making here is we're not taking a position on one way or the other, and we're certainly not going to predict doomsday. Okay? What we are going to say is you can control certain things. And you not having debt, let's start there, George, is a good thing.
Okay, I love Ken. I love him. So great. All right, George, this is getting too complicated. Can't we go back to yelling at poor people about their debt and blaming everything on the poor people? I'm good at that. I can do that.
I'm an economist, and I think they're ill-equipped to do so.
You're talking about international fight. Can't I just go back to yelling at poor people and telling them they're stupid? Can I just do that?
Can I go back to telling people that I'm a career expert, even though
I have no background in it?
Not my background that has anything to do with that.
But George, Skippy, oh no. George is one of those guys who skims an article and thinks he's a genius. So nope, he's gonna ride this horse all the way down to hell.
Oh, absolutely. So let's talk about the consequences if this ever were to happen, which, by the way, we've got an MSN piece here saying, plans by Russia and China to challenge the dollar on the world stage are going nowhere. Experts say Russia's fragile economy and China's capital controls make both of their currencies less appealing. If that gives you any peace.
Right.
Now, let's talk about some of the consequences if the U.S. were to lose its world reserve currency status. So, firstly, the value of the dollar would likely decrease, which leads to higher inflation. Nobody wants that.
So this is... So, let's start with his analysis. So, not going to happen. But if it does happen, why are we talking about if it does happen? It's not going to happen. You just said it's not going to happen. I don't get it. If we lose our world reserve status, under what circumstance? How?
Well, I don't even know if he knows what that means.
No.
And I'm not blaming him, but he's now talking about it like he does know what that means.
But what he's also assuming here, in whatever this hypothetical he's doing, he has to assume there's something else that replaces it. What would that be? Are we saying, okay, all of a sudden the yuan becomes so stable that becomes the reserve standard? Well, that would also mean China would have to open up. China doesn't even have a market. They don't have a secondary market. They don't have an exchange like the New York Stock Exchange. You can't trade stocks in China like that. China doesn't have an open trade policy with currency like that. You can't trade out their currency in world markets very easily, unless you're doing it through secondary markets if somebody's already purchased it. So China would have to change everything about their economy and their market economy. They'd have to create a stock market, which they don't have, and a commodities market, and an options market. They don't have any of those things. They have no secondary markets. So what you're talking about is all pie in the sky, because for a dictatorship like that, they say they're communists. They're not communists. They're a dictatorship. For them to open up like that puts a lot of danger because it democratizes their economy. So it puts a lot of danger on the so-called Communist Party, which is really just a dictatorship, because now all of a sudden they're beholden to the wealthy. Because they can't just... But let's see what he says real quick, and then we'll close this out.
And even higher interest rates.
Right.
Now, here's the interesting part. If you get out of debt and you no longer need to borrow money, interest rates don't affect you as much, do they?
Right. Now,
so that's why you're saying get out of debt.
Okay, that's just stupid. Okay, we'll close it there. Even if you have no debt...
Well, that's that cycling back to... Let's just bring this back to...
yelling at poor people.
Poor people about
and
their debt.
He's also incorrect. Interest rates, if you're out of debt, interest rates don't affect you. Well, no, not exactly, because if you're going to purchase something or get new debt, higher interest rates mean you're paying a higher interest. When you get a debt, it's locked in, right? If I buy a car or a house, the interest rate I buy it at is what the interest rate is going forward. It doesn't matter how much the interest rates raise after that. That's the one I've locked in. That's what I'm contracted for, right? But if I'm going to buy something new, then interest rates are going to affect me. It's also going to affect other prices, like prices of goods. It's going to affect the ability of companies to get money and hire more people, raise wages, create new jobs. So this idea that, interest rates don't affect you if you've paid off your debt. Well, if you have debt, they don't really affect you because you're locked in almost all of your debt. If you don't have debt, you're still in the same position of people with debt, which is interest rates are going to affect job creation. They're going to affect taking new loans, new business, and it just screws the entire market. So once again, they half read something, don't understand it, then they start applying financial concepts they don't even understand. And they're doing this what if game when the what if is not even likely. I mean, what if a comet hits the planet?
Honestly, they got in way over their heads with that one.
No, I know. I know. It's like two kids trying to fake a book report. and they only read the first couple chapters. It's like, great expectations. All I can tell you is Miss Haversham should throw that cake out because it's getting rotty. And that's the book. And they all ended happily ever after.
All right. Well, on that note.
Well, anyways, that's the whole connection. I mean, that's the big Republican thing is we're going to talk about wokeism in China and argue about these things. When really what it comes down to is it's just a lot of normal course of business kind of shit going on. Companies are trying to make more money. China's trying to improve its financial position. Nothing interesting is happening other than capitalists being capitalists, but they're trying to make it into some sinister plot.